investments will only come to their demat accounts and bank account, which have to be.
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to all the sectors that are moving in trade and all the stocks that are buzzing as well. We'll also get you expert views as to how should you be really approaching the markets, the strategy you should have, and the key stocks that should be on your focus radar as well. But first up, a quick check on how the markets are doing as we inch closer to the closing action of the day. Well, the markets have in fact sold off from the highs of the day. We have seen that the Nifty and the Sensex have turned absolutely flat with slight positive bias at this point in time. 18,272. We also saw the markets actually drifting lower for a bit. Sensex hovering just about 30 points higher at 61,792 as well. Now, what is really creating the pressure in the markets and where are you exactly seeing the markets looking weaker? Well, if you see, we are in terms of the sectoral indices, slight losses coming in on the banking sphere. The Nifty Bank is what has turned negative right now, and that's where the pressure is emerging from. In the morning trade, we did see there was a 1% cut in the PSU banks. Right now, they've actually slipped to the lowest point of the day. The Nifty PSU is down by 2.5% in trade. Apart from this, we're also seeing some of the other sectors also looking at sell-off coming in. Realty pack down by almost 1%. Consumer durables down in trade. FMCG down half odd percent as well. Apart from this, we've also seen the metals, also coming under some pressure. Financial services too. Barring some gains in the auto pack today and slight gains coming in on the pharma pack, on healthcare especially. Private banks still holding up in trade despite the overall muted trend in the Nifty Bank. Rest all of the sectors have in fact come under selling pressure as well. Let's look at the laggards first, the top Nifty 50 losers at this point in time. Where are you seeing the pressure points getting created for the markets as we speak right now? So as far as the Nifty losers are concerned, UPL, ITC, SBI, the big heavyweights also coming down under pressure. Bajaj Finance 1.5% down in trade, for example. JSW Steel, Hindalco. So the metal names are also seeing some sell-off taking place. Grassing, Apollo Hospitals, Power Grid, some of the other laggards at this point in time. What's still holding up despite this overall trend on the muted phase? You're seeing IndusInd Bank still hovering higher by 1.5%. Axis Bank, AU Small Finance Bank also moving up by over 1% as well. IDFC First, Federal Bank. So some of these private banks are actually still holding up as far as the top Nifty 50 gainers are concerned. But let's get our guest on the show now. Rohan Mehta joins in, founder and portfolio manager at Turtle Wealth. Welcome, Rohan, and thank you so much for taking the time out for this discussion. Well, we had been looking at the markets really rebounding quite sharply from Friday's loss in yesterday's trading action, then continuing at least up until now. But looks like the markets are actually coming under this profit booking sphere as well. What is your own sense of how is the rest of the May really going to pan out? We were thinking that perhaps this is the time that the markets will defy the trend of sell in May and go away. But are we likely to see that come back then?
Yeah, of course. See, we have done a back testing of May. Honestly, May is not a bad month for Indian markets. At least it's a axiom which people say invest in the US markets, but not in India anymore because May have done much more better than what the quote is all about. So, looking forward for May, we had seen some significant rally in last month. Nifty 500 was nearly about 3.5 or 4% plus, and then we also saw a rebounding in the markets. Overall, we feel that markets is at 21 month of Nifty 500 to be at the same consolidation level. You will be surprised. Pre-COVID, there was 30 months of consolidation, and then we saw a huge rally in market after COVID, post-COVID market. So we believe that with every bigger consolidation, the bigger trend is following up. I don't know how much time it is going to take, maybe a quarter or more, or 2 quarter or more, but we are extremely bullish that market is into extreme strength division. The quarter numbers are panning out much better than our expectations. The number is better, the company is doing much more better, and India being a extreme consumer centric market with superior demand, anything can be sold in India, and if you are a good product, then you can sell it in masses. In that segment, overall the growth has been very significantly well, though the slowdown has happened over the period of time, but that I think so after 2 to 3 years, which has been after post COVID, it had to be there. And we are in calendar year, if you see, we have not done that great in comparatively to world markets. But if you see on a scale of 2 to 3 years, we have done outperforms many of the global markets. And Indian markets are specifically in the result of what results you are performing in quarter to quarter numbers. There are certain companies and sectors which are showing a very strength of resilience of getting better and better. So very positive on Indian markets.
Got that. Now, before we come on to other themes, the sectors, your preferred stocks, and what the strategy you would be advising investors to adopt in this current market scenario, I wanted to actually touch base on some of the stocks that are actually buzzing in trade, be it on the positive or the negative side. Let me start off with the negative only. Zomato's shares have in fact come under pressure. It's down by over 5 odd percent, almost a 6% dip today. Now, what is the key reason why you believe that the Zomato shares have come under pressure? We've been hearing this escalating noise about ONDC and how perhaps that could lead into a disruption in the food tech space. And apart from that, we've also seen the report suggesting that Invesco has cut down on Swiggy's market valuations. Do you believe either of those news flows have actually impacted the sentiments today? Or is there anything else also that one must read into the kind of dip that we have seen today?
See, let us see if the way Zomato has done. Zomato has gone nearly about from 25 to 30% from its bottom, and did a
So that's as far as Zomato is concerned. Any expectations on the earnings this time around from Zomato?
we don't track that closely Zomato because we don't hold it, but on a longer scale, we expect that by 2024-25 they will be net positive.
All right. Apart from this, the stock that has made debut today, Mankind Pharma, we've seen a sharp rally today on day one. How do you assess the company, the kind of fundamentals that the company has, financials the company has, and do you think as a disruptor when it comes to affordable medicines, which the company has been claiming, and that is their strength? They are a big, strong play on the domestic market. Will they be able to retain the kind of, so we've seen today, like, the stock is still surging higher by about 30% now, 1413. In fact, before the listing, we saw Macquarie come out with the report saying that they wanted to initiate coverage with a 1400 target price, and that price has been crossed in just day one. Despite this kind of rally, do you still believe that the company has in itself to provide further upside to the investors?
Yeah, see, first of all, it's a great business. What they have created with a very local brand to now a pan-India brand is itself an exemplary process. It's a very tough market to come into, where you have international players, where you have companies from US have a brand dominance, and you come and make a brand dominance is something which is superiorly right. And a local company, a very small company, from what they have done. See, the premium, I'll tell you a very interesting data which I always see is that when the markets are not amazing, which is the right now, right time, and when an IPO comes at this point of the market, always feel that this IPO has much more to give to investor on the table rather than the company coming at the peak of the market times or the markets which are very well. So whatever IPO comes are going to put certain play certain food on the table for investors, and that's where the amazing part comes. And talking Mankind, what the growth generation which can happen. See, it's very hard to tell on the price sentiment point of view, because the first day sentiments happens, the the deal happens, and for the first 2 months the things happens. Generally at Turtle, we avoid to buy stocks, an IPO stock, till 1 or 2 months, till the time it settles out at the price discovery point of view. But overall, as a brand point of view, it's a very strong brand, and people will look forward for getting it in their portfolios.
Okay, understood that. Now, apart from these two stocks that we've discussed, in the overall markets, we are approaching the fag end of the earnings season as well. What exactly have you made out of the earnings so far? Any particular sectors that have actually stood out for you, where you would want to be, building positions, and where you would want investors to keep their focus now?
Yeah. So I think so. It was much more better than expected, and that's what the rally we have seen in last month. There are certain sectors, and there are certain, like for example, the first sector which comes to my mind is auto. If you see the results of TVS Motors, if you see the results of Bajaj Auto, it has been a very decent results with a lot of growth. EV market in two wheelers have taken its own space now. The difference between the consumer perception of buying a normal vehicle to a EV vehicle in still four wheelers is there. But if you see in two wheelers, that that differentiation is going as below every quarter on quarter. So now why I will buy an Activa which is 1.1 lakh rupees of a scooter, why I'll not buy a EV scooter which could be better technology, fuel efficient at 1.2 or 1.3 lakh rupees. So that's what is why we are seeing growth into EV scooters or EV bikes for Bajaj and TVS Motors. So that's where I think so, things are getting better into automobile space, where the consumer centric brand is getting better and better, with the volumes issue has been solved now, much more solved now. So now that is where, and then there are certain niche, like manufacturing has done a better job. If you see a lot of companies onto the ABB side, Siemens side, they've given some decent returns out of the blue. And see, let us not forget manufacturing, specifically in the West. If you see, Holi is a very, very big picture. And this time Holi was nearly about 20-25 days, where labor just goes out of the world, and company gets into problems. So last quarter was not that high for the business. But looking forward for what we meet with management, talk with the management, current quarter has picked up very well. The demand has been very robust, and the international market also has gone much more better. So this quarter will be more better than the current quarter results what we are seeing ahead.
Okay, understood. Any particular pecking order in which you would prefer these auto stocks? What are the stocks that are on top of your own radar?
Yeah, so first of all, disclaimer is that this stocks what I'm talking, we have a buying interest in our PMS, portfolio management services, and that's what we have not bought for any insider trading stuffs. So our topic has been in the four wheelers, has been Mahindra and Mahindra. See, our outlook of buying a stock is there are three levels of what we see into a company. First
Okay.
of all, it has to be a turnaround business. Second, it has to outperform Nifty 500 for a 1 year time span, and it has to outperform the sectorial index, that is Nifty Auto. So these are three verticals which we see into it. So Mahindra and Mahindra happens to be XUV 700 to tractor to EV rickshaws, and now into EV cars. A 360 degree change into the management of the company with the product what they had. 2018 till 2018 they were the leader into EVs. Now they are not leaders. They were early leaders into EV vehicles, which didn't help them much. Now the whole management has changed, and that what you've seen in XUV 700, XUV 400. So first buy is for Mahindra and Mahindra, where we are very bullish. Second, in automobiles, we are very bullish on TVS Motors, extraordinary company, a fourth largest company into an automobile company, but still having the highest growth rate. And that's where we are very much, our eyes are glued to that TVS Motor. Also, their investments into EV space into Europe, companies are doing much more better. And then the recent addition we have done is Bajaj Auto. They're coming
Okay.
up with 125cc 5 bikes, and a lot of new things. And again, it's a great value to buy. 8 years nothing has happened into Bajaj Auto, and now the exports have picked up. We are feeling that the company would be doing much more better in the next 1 to 2 years.
Got that. Well, thank you so much, Ron, for being with us and sharing all your insights about the sectors and the stocks and the way investors should be approaching these right now. Let's look at the markets as well. 10 minutes remaining for the markets to shut shop. Looks like it's going to be another pause in the kind of an up move that we've been looking at in the markets, because both the Nifty and the Sensex have drifted lower. In fact, flat with a negative bias. 4 points down for Nifty, 25 points down for the Sensex. It's trading at 61,753. We'll have to continue to keep focus on whether there is anything that could again lift the sentiments for the markets, or is it likely to be a sell on rise kind of a rally that we are witnessing at the moment. Continue to focus on the markets. Do stay tuned with us onto Business Today TV, and also don't forget to subscribe to this channel and continue to engage with us on our other social media platforms as well. That's Facebook, Twitter, LinkedIn and Instagram. Until then, thanks for tuning in.
The Indian OTT landscape is fast changing, and Amazon Prime Video has emerged as a front runner in this whole scenario. I'm joined by Mr. Sushant Sriram of Prime Video. Thank you so much for joining. It was a lovely address. It was lovely hearing about what's coming up next. So, do you want to get into what's coming up next and give us a sneak peek?
We didn't do a sneak peek inside, by the way, of what's coming up next. We have a lot, short answer, coming up next. In fact, just yesterday, we announced our next Amazon original, The Hard, which is with Excel and Tiger Baby Productions, with